In this video, I want to talk to you guys about the idea of retiring by 2030 and using my beloved SoFi stock as a way to get there and how many shares I might need to pull this off. Now, this original video idea was done by Mark Farfan, which actually showed off how to retire using Palantir stock. But I wanted to show this off using SoFi stock and what those calculations would look like based on valuations looking all the way out to 2030. Now, if we look over to my spreadsheet, we can see a couple of generalizations already. So one being that US average monthly living expenses are around $5,000 a month. On an annualized basis, that's around $60,000 a year, so that's going to be our target for retirement. Well, knowing that the average retirement length is about 18 years of length, what we want to do is actually shoot for something closer to around 25 years to give us more of a conservative outlook and actually be able to achieve a longer retirement. And what we get to see by our calculations is that we need around $700,000 US to actually be able to retire for those 25 years, assuming that there's an average of an 8% rate of return on our money as we start to withdraw it. Obviously, though, because we are investing in growth stocks, that this number might actually go a lot faster, but this is assuming that we're taking out of our SoFi investment at 2030 and investing it into something safer like the S&P 500. And whenever we look, we can see using just this simple calculation that on average, and this is a forecast, so it can be very inaccurate, especially the longer that you forecast out, but by 2030 that we would still have an average of $174,000 left. Now that we understand the goal, what we want to see is the actual forecast of how we're actually going to get there and then how many shares we might need to actually achieve this goal. But let's jump right into it. So looking at the first forecast here, what we're going to do is assume a couple things. That SoFi stock is sitting at around $12 a share, okay? And then what we're going to also assume is that we're also seeing on this one a 15% compounded annual growth rate. Now, this is drastically lower than what we're seeing today, but it doesn't mean that we're going to be seeing a flat 15% across every year. This means that we could potentially be seeing 60% growth rates now, and by 2030, we're seeing about 8%. And so it actually starts to generalize and hit about 15%. This is our low estimate though, and in no way do I actually think it is going to be this low. I actually think it's going to be more aggressive, but I want to show a more conservative view as well. And what we get to see on this forecast is actually by 2030, we would actually see a price target of $42.21 a share. This is only assuming a compounded annual growth rate and not assuming share buybacks, like I said there, no issued dividends, which is a standard for regulated banks, or no change in price to sales ratios or price to earnings ratios, meaning that the multiple that we have right now won't actually change and people might not get more aggressive on the stock, which can happen all the time. So what we would actually need to retire off of this estimate, which is their quite low estimate and quite conservative in my opinion, is actually standing around 16,584 shares, or as of $12 a share valuation, about $199,008 American. Now, let's jump on over and actually look at our medium valuation to see how we might actually be able to speed up this process. This is just a forecast, however, but going with a 20% compounded annual growth rate, we could actually see a price target of around $61.92 by 2030. This compounded annual growth rate, in my opinion, is the most likely. However, I do actually think that this is going to include share buybacks, issued dividends, and all sorts of these things combined that will actually bring up this price even more. However, I do think that this stock will grow at a compounded annual growth rate of around 20%, 20 to 22%. This leads investors like myself to need around, well, 11,305 shares needed to retire, or $135,660 as of today, which stands at around $12 a share. If you get the shares for any cheaper, it's just going to go that much faster. But now, let's look at the high valuation and what is actually a 25% compounded annual growth rate. We can see here that by 2030, there's actually a price target ending at $89.41 if we include the 25% compounded annual growth rate, which I do not actually think is out of our range of possibilities considering how fast SoFi is growing right now. With this current valuation, what we would actually need to see is actually an amount of around 7,829 shares needed to retire by 2030, or $93,948 as of $12 a share. Now, I wanted to actually add in another statistic here, which is just going to be my pure hope category, okay? This is the one that goes way above what I actually think is going to happen, although we are actually growing at an amount of 60% for next year, and so if we continue to hit new highs, put out new products, and Anthony Noto just blows everyone away for the next 9 consecutive years, what we might actually see is this. If we look at the pure hope category, okay, what we can actually see is a compounded annual growth rate of 40%. Now, this very much changes the equation. As you can see, by 2030, a price target of around $247 a share. This would be achieved by continuously doubling their amount of members, products, cross-selling, and all sorts of new products, new partnerships with new companies, and continuously putting out that huge digital transformation to what are neobanks, digital banks, and cryptocurrencies. This doesn't even include share buybacks or issue dividends, which in a pure hope category, both would end up happening, right? It would be a good actual, use of capital to buy back shares if what I think today is a very low valuation. The amount needed, however, in terms of shares for our pure hope category is looking at 2,823 shares, or only 33,876 shares at the price of $12 a share. Obviously, the price of these shares have actually dropped below that in recent times, and so if you're able to get these shares, it might even go quicker than that, but this is an absolute pure hope category. Remember that in this video, there were a lot of assumptions made of what you would need to retire, the length of retirement, and the overall amount of growth for this stock. Lots of things can change in this valuation. If perhaps you don't need as much to retire, or if you need more, you might actually need more shares, or if potentially you even have a more bullish statement than what even might be in our pure hope category. Although I think it's important to understand that what's happening in the most very recent quarters like 2022 might be very different than what's going to happen all the way out into 2030. Although personally, I'm going to try to acquire these shares as if we're going to see this lowest benchmark, and then if the actual high or pure hope strategy actually ends up happening, well, that's just going to be gravy on top. But if you want to see more videos on SoFi stock, make sure you guys check out the 32 reasons for why I'm buying SoFi stock right now. Make sure you guys give me the like and subscribe down below if you want to see more financial content just like this.